Anthony can send out the presentation deck from, for future reference. And so, this is really a real treat to be able to bring so many partners together. Roxanne, building on what you said with the organization at BOC, I think this particular webinar is special because we were able to really work cross programmatically. And, I myself, I'm Ryan Cagle. I work at Business Outreach Center Network, and along with my colleague, Daryl Holland, who's also on the line, and Quincy Ely Kate, Director of the Industrial Business Program. And so, we serve industrial and manufacturing businesses across Central Queens and Eastern Brooklyn. And this webinar is a unique partnership that we're doing with MBDA, with Roxanne, her amazing team, with the great folks at Contractor Compliance, with Andis and TSIB, with Anthony as well. And so we're thrilled to be here, and we're thrilled to just, continue this conversation from Tuesday night. And as a reminder, please everyone mark on your calendars that we will be presenting a final time on Tuesday, December 15th, next week, where we have, some very special guests. And so with that, I'll turn it back to Andis and Anthony.
Thank you, Ryan. Good evening, everyone. I'm glad to be here again tonight. And for next Tuesday, just to hit on that one more time, LF Driscoll is going to be the guest speaker. They're working at One Brooklyn Health System, and this is the outreach compliance officer for Driscoll on that project, and they're here to meet quality MWBE. So please be there, engage with them. It'll be a great start to potentially getting a project with them.
And tell your friends. Can you tell a little bit about the project, Andis, at One Brooklyn Health, so people understand the scope and the size of it?
We're gonna go into One Brooklyn in the presentation.
And one thing I will say in particular is there is a 30% MWBE goal. But what's really exciting about this project, it's focused on Brooklyn. So Brooklyn-based businesses, there's in addition to the minority women business goals, there's local business goals. It's very exciting. Go ahead.
Okay, so let's get into it here. Oh, let me share my screen. Okay. All right, tonight's presentation is going to be focused on managing multiple projects, really get a look into how some of the larger GCs and trade contractors manage the multiple projects and their costs, their insurance costs and exposures for it. Just to recap real quick about what we talked about yesterday, the purpose really of these two sessions is to get you to, change the way you're thinking about insurance, understand what the hard market is. It's here to stay. Be prepared for an increase in 2021. Talk to your brokers earlier, get those numbers earlier. Really 60 days before your policy renews, there's no reason why you shouldn't have those numbers if your broker's pushing properly. So it could be, a tough renewal. So, get at it early. The hard market impacts the ENS market, which is how you buy contractor coverage here in New York, through the ENS market. Limited capacity, you need that top shelf submission. Narratives of your company, resume, history, references, work in progress list. The more you can give them, the more comfortable you can make the underwriters with your business, that they understand it, that they know what they're insuring. That is what, is really required these days to get proper quotes.
It's really like preparing a proposal. Like you would be preparing a proposal for a client. That's what it's got to look like. It shows your organizational skills, your due diligence. It gives that insurer a level of confidence.
Yeah, and if I had to, there are more products out there than people realize. Explore the non-traditional options. I really recommend, if you're currently questioning your broker, put the brokerage out, not quite to an RFP, but run your own little RFP. Bring in 3 brokers from 3 different agencies and see what their strategies are. And, perhaps your program doesn't quite change this year, but they put you on a plan for a long-term plan and program to work towards. So just don't fly blind. That's really the message here. Think about these things more because the cost is, a huge number.
Anthony, if you are going to do that, sometimes they ask you to share with them your current policy. What portions of the policy do you share, and which?
With a broker, there should be no fear in sharing your policy with anybody. You're looking for them to evaluate what your program is today and give you recommendations on how to improve it, where it needs to go, what other options there are. So a lot of times people are, redacting all sorts of information on these policies. And I never quite, some instances I get it, but I think if you have the appropriate policy, show people that, I think if you're able to secure the right coverage and, operate profitably, I think it should be a resume builder, in my opinion.
And I guess with that being said, I think part of the issue is that they're basically all operating on the same fee. So it's not like there's a lot of different parallels of fees that they could be charging. It's really 10%.
Right, that's correct. And people's rates are going to be different. And just because your rate is high doesn't mean that you're running a bad business. So people sometimes think, oh, I got a high rate. So a lot of the times there's reasons for that. And it shows more if you have an issue and then, come up with a solution for it and a strategy to alleviate it or prevent it from happening. I feel that the underwriters like the risks the most that have gone through adversity and come out the other end. So they know that they're wise to it and resilient and, someone that they want to partner with, not just someone who has never had a claim. So they're probably not paying attention. It's like, it could have just been luck that they haven't had a claim. So it's tell that story as best you can.
And that's the same for my own business as a WBE. Having gone to the brink in one business, I've worked very hard to make sure that doesn't happen again. And so that story needs to be told.
Yeah. The agenda for tonight's session, we're going to start with talking about cash flow, understanding the construction cash flow versus the insurance, premium payments. We'll talk about how you can negotiate your payment plans, the notice of cancellation timeline. We'll talk about reporting exposures, which, is really the one way that you have to have a say in your cash flow a little bit. A lot of times people hear audits and they get scared, but I think it's a tool that you can use to your advantage in certain situations. And we'll talk about multi-rated programs, hybrid programs versus single rate programs. I'm going to show you 2 tools that I use with my clients, large and small, to manage the work that they do, keep them organized. Really, that's what the message is. Far too often, people renew their policies and then just go on autopilot till the thing renews. If you properly track specific exposure data, it makes a huge difference to how the underwriters look at you. A little bit off topic, I want to talk about life cycle of a claim, and then we'll finish off talking a bit about the OBHS project and the insurance requirements they have. But the goals continue to change the way you think about insurance, learn how these large contractors track their costs and exposures, and just get you guys prepared to grow. That's the theme of these sessions. So diving into cash flow, important dates to consider: the date you sign your contract, the date you start construction, and the date that you first get paid. The contractors, the GCs, the primes, they're bullies, and they will get you to sign this contract as quickly as possible and make you produce a certificate of insurance in order to sign that contract. The second that happens, in order to have that certificate, you have to bind your policy. So you could potentially be starting your policy, let's say January 1st when you sign a contract, and you might be 90, 120 days out from even starting construction. And then you're on the job and they discover asbestos and they shut down the job. So now you can't work for another 30 days. And all at the same time, your payment schedule for insurance is not stopping. You make a down payment up front, 25% down. We'll talk about why it's 25% a little bit later. And then you get 10 installment payments every 30 days. They don't care if you have a stop order, you have to pay their bill. So it's just kind of understanding that basic framework.
Will you tell us, Anthony, what to do? Perhaps a letter of intent that doesn't require binding? Will you go over that? There may be some strategies.
Yeah, we'll get into that. I mean, the strategy is secure quotes from the marketplace before you bid on the project. I mean, chances are everyone has an insurance policy that exists today, but let's say you have to increase your limits. Let's say you're short on limits and your program's no good, because this frankly is a frequent situation of MWBEs, that emerging ones that are referred to me. They have a policy that's been rejected. They win a contract based on an insurance price that they thought they were paying, $10, right? They sign the contract, they submit their insurance gets rejected. So at this point, you've already signed that contract and you've signed it at a particular dollar amount. Now you reach out to me and I tell you, your insurance isn't $10. Now it's going to be $200. And you have to, chances are a lot of the time, the GC is going to say, hey, that's your fault. You made that mistake. You got to cover that difference. And again, they're just going to bully you. And, perhaps if that's the case, you pull out of that bid because they won't work with you. But now you know what your proper insurance cost is when you go to the next one. So basically the answer is get a quote and bring that quote to the GC, the prime, whoever it is, and tell them, here it is, here's the cost. I'll bind it when I'm going to start my work. So you're going to have to waive my need for a certificate of insurance today, but here is the quote from the insurance carrier. Here's all the coverages. Here's all the forms and additional endorsements. That's attainable. You can have that. And in my experience, if the prime or GC wants to hire you, they will work with you. They'll say, okay, sign the contract. You give us the cert in 120 days.
Or bind the contract and say, when you sign your contract, make a change from the GC that effective immediately, insurance is going to be paid monthly. And if there's delays, they're responsible.
Yeah, I mean, it's very tough to get them to agree to that, but it's certainly, it never hurts to ask. And you could also send a bind order into the insurance policy, into the insurance program with an effective date in the future. So you can sign a bind order and have an official, I will have coverage on, 120 days later from that date. I think there might be some questions in the chat. Do you see anything there?
Oh, I'm so sorry. Yes. I got so excited. Pauline, JPR, nice to meet you formally. Pauline, we've spoken on the phone. What are your company's asks so you evaluate a new customer? How do we evaluate you as a new broker? Do we get one broker that handles the policy, or do we speak to different people?
Was there anything, what was her name? I'm sorry.
Pauline, JP.
Pauline, is there anything you wanted to add to that question?
So when she comes to you for a quote, she speak to you? Do you just do the intake and then it goes off to administrative people, or?
No,
how does it work?
every situation, everything is different. So if I'm a contractor and I'm not happy with my broker and I'm looking to find a new one, how would I go about doing that? The first thing I would do is ask for referrals, ask the prime contractors who have hired me, hey, who's your broker? Can I talk to them? Talk to the GCs, people like organizations like the MBDA, et cetera. They will give you referrals. So go to people you trust, ask them, who they think is reasonable, and meet with all of them. Don't just meet with one and take the first person. I feel like that even happens far too often. But try to just steer clear of that. It's hard to explain, but I'm sure everyone here can understand what that robotic broker pitch is. You've heard that same thing multiple times. I can help you with price. I got the best relationships with the market. None of that stuff matters. You need to work with someone who you view as an advisor to your business, who, them brokering an insurance policy for you is almost secondary. You need that person to be, helping you build your network, helping you get connected to new resources, safety, et cetera. Bring you creative solutions. Go ahead, Anders. Clients, yeah. I mean, any good construction broker is going to have clients, and connecting people, getting my clients more work means their premiums go up and my commissions go up. So it's in a good broker is going to connect you and grow your network. These are the things that I'm looking for. Go to their websites. You can, even just by looking at the website, you can tell which one's more professional, which one's not. Be as construction specific as you can. Don't just, if you can go to their websites and you'll see, we do builder's risk, we do GL, we do contractors, we do this. Look for interesting things that they're writing or saying, posting. Look for the thought leader. Go to their LinkedIn page, see what they say there. That's how I would, and don't rush the process. People rush the process, and, you can't, it's good to get referrals from people, but you also have to use your instinct and your gut and who you just feel comfortable working with, because if it's the right selection, they're part of your business for 15 years. It's not something you have to worry about. So that's just, I don't know if I quite answer your question, Pauline, but that's my thoughts. I would speak to a few people. You could even send them, you could even create your own little RFP and put a list of 10, 15 things you want them to address and see what their responses are. They should be creating presentations, presenting themselves to you. New York contractors cost a lot of money. It's the most expensive premium in the nation. So, you might think you're a small business and it's not worth their time, but you see how much these premiums are. And once a contractor goes from like 2 million a year to 10 million a year, it's a serious commission. So good, reputable brokers will work with you, should want to work with you.
Anthony, what do you ask of the prime? So, we work for these primes, and, are we supposed to be looking at what kind of insurance they have? Are we evaluating that at all?
If you're a low tier contractor, I mean, not particularly. They'll have insurance requirements that you have to meet, but they should be pretty standard. I don't find that there are particular projects or companies that have much higher limits than somebody else. The limits, the requirements, they're all basically the same. It's just whether the person has them or not.
I think.
So
the
no, I
two
mean, I
points-
wouldn't, go ahead.
2 points I think that you made are so important, and we've seen this in our practice together so far. It should be a construction insurance company. It shouldn't be your brother-in-law who does commercial other stuff too. That's really important. And the second thing is the infrastructure that the organization has. So one of the biggest questions I get from MWBEs is, I don't work for people I don't know. And that's sort of self-limiting. You know, your broker has loss histories on a lot of subs and GCs and subs in the community. Ask them, hey, I'm about to take a contract with Skanska. How do they treat people? Have you ever done business with Skanska? I'm looking to go with Joe's, carpentry. Does he have a loss history? Is he a safe contractor? Use that information in their database belongs to you, and you have a broker that's robust.
And what's crazy is you're paying the experienced construction broker the same exact thing you're paying the mom and pop shop who doesn't even do construction insurance. So that's the other thing. Like, you should be getting more for that premium.
One question, Anthony, from Prapon Ash Contracting. Sometimes you have to check with the DOB insurance requirements on top of the project insurance requirements, because the DOB can require really high insurance, especially if it's in Manhattan next to high rises. So do you have experience with that?
Yeah, I mean, it's you have to look at the insurance requirements or whatever project that you're on. Have I ever had to look at the specific DOB? I mean, all the public projects I've worked on, the owner, the agency had dictated the insurance requirements. I'd have to look into that. I'm not sure. I haven't seen the DOB insurance requirements.
That's a good question.
Yeah.
Just back to Pauline, one quick one. If when you utilize a broker, should you expect to speak to one person, or will you be speaking to multiple people, or do you have one person that's the gatekeeper that you're responsible to for the most part, but perhaps there's certain questions that would go to an administrative staff?
So another good question. It depends on what broker you're working with, what brokerage, how they operate. So in a mom and pop shop, you're going to be dealing with the one person just for everything, all requests in and out of that person, and there might have a little bit of admin staff helping them execute. Mid-sized firms, regional firms, firms out on Long Island, Westchester, whatever, they're big shops. They have a lot of people. So when it gets to that size, there's the producer, who's the broker. Then that broker will have an account manager. So the account manager issues the certificates of insurance, handles all that day-to-day administration stuff. So sometimes, if your broker is super busy, they probably have you just shooting those requests directly to the account manager. That's how we operate. When I bring on a client, I have an account management team, a couple of guys, and my clients submit their requests to them. They CC the broker on the request because that's just stuff that the broker doesn't have to do. So the role of the broker is to provide you with the consultative approach, organizing their team. So like within TSIB, we have a claims team, a loss analytics team, an account management team, a RAP service center team. So all these various teams, and this is any good brokerage is going to have a slew of different teams available. They will, you communicate with the broker, stay transparent with the broker. They will then utilize their team to come to the table and solve your problems and recommend things. Like if I'm evaluating somebody's program, I gather information, I discuss it with my team, we then get some more information, and then the loss analytics people have something to say. The claims people and safety people have something to say. So, and again, this is all involved, it's all at the same cost as what you're paying the mom and pop shop, that same guy. So ask them about their team, their support staff. You know, any good construction broker in New York, they're submitting to RFPs left and right for insurance RFPs. They've got all this information saved, stored in their systems. You could read all about their staff. You could ask to speak to their staff, because that account manager, so the one just under the broker doing that day-to-day stuff, it's great to have a strong relationship with that person. You know, they'll work harder, they'll work sharper for you. And if you need something done really fast, that's the person who has to do it. So the broker's the lead point with the client. And then he just kind of plays quarterback for the team that they have internally to provide their services.
And when I was taking my insurance exam, I got to tell you, a lot of the people in the course were service center people for mid-sized insurance companies. And these I forget their title, were so sharp. I'm sure the broker knows, you know, a lot, but the administrative staff does nothing but look at policies all day long. So it's actually in your best interest to have multiple people checking your policy to make sure that you have your best coverage. Prepon had one more thought about on DOB contracts. There's a 15 million GL coverage required if adjacent buildings are 7 stories or higher. So is that, and it's a great point.
But that requirement's for who? That 15 is for who?
It's the DOB requires it, but that should be in the contract requirements from your prime, your GC. But if that's great inside information to know. If you don't see a $15 million limit and you've done a site visit and you see that there are adjacent buildings that are, you know, tall, that's when you sit down in your DSCOPE meeting with your contractor, say, you know, I did a site visit and I see, you know, there are adjacent buildings that are 30 stories tall. Does this require $15 million GL coverage? It's not in your, you know, invitation to bid.
Yeah, I mean, I'd have to read that limit and like what the requirement is for, because it could be for the owner. I don't know if that's for the subcontractor. Typically,
yeah, I think her audio is not working, so this may be is she serving as the GC in this case, and okay. If you're doing facade work, you know.
Yeah, if you're serving as the GC, I would venture, my gut would say 15 million is not enough, and you're doing that type of facade work. You know.
And just to translate, because again, the microphone adds, you need to get that 15 million in order to get a permit.
Yeah, you're not going to have anything around. That's why I was confused about the DOB thing. She's GC in a project. But yeah, that's you know, I would say that 15 million is warranted. I would recommend you most likely should carry more. And when you get higher up the ladder on the excess, there's not a whole lot of difference in price. The excess market, it's really tough for the first 5 million is crazy tough. It gets easier to write once you go higher up that tower. So once you're at 10, you know, it's not like the 5 million between 10 and 15 is a lot less expensive than the first 5 million. So, you know, 15 might sound high, but you're a GC. So as long as you have really strong contractual risk transfer underneath with your subcontractors, you should be able to get a really favorable rate. And there are really good programs that are written because insurance carriers like GCs. They like that they could have layers of insurance underneath what they are insuring. So there are really competitive programs that exist only for owners and GCs for projects that are less than $50 million, that have great coverage, and they do a thorough job of risk transfer, of subcontractor vetting. So not only do you get a great insurance rate with that program, but you get a top of the line law firm to do your certificate vetting for you. So there's great, and to get 15 million with that program, you know, I would say it's 3% of construction cost, give or take, somewhere between 2 and 4.
And you could pay between, 25,000, 45,000 a year for 5 million in excess. I'm sure I have in the past. And certainly this program that you're talking about, Anthony, for a small GC or a medium-sized GC, the money is made on those subs. And so that totally invalidates all of those pickup truck guys that you use to try to make it up. You can't use those guys. That's the whole thing. The pickup truck guys can't transfer that. You can't transfer that risk. They're not carrying the insurance under you. That's the problem.
Well, I mean, listen, yes, that is right. From the GC owner's perspective, it's they can afford the insurance because whoever you have underneath you, and this is interesting because this actually we can talk about OBHS a little bit. It's the same model. OBHS uses this program that I'm describing. Let me scroll up here. OBHS has the Labor Guard program. That's the program that I was describing to you. So yes, it's a great bargain for the owner or the GC, but it is tough on the low tier subs. In One Brooklyn Health's case, I'm going to pull up now the insurance requirements for this project. So everyone can see this. This is forget CMGC. This should just say values of work. So for the smaller contracts between 0 and 5 million bucks, they require 1 million, 2 million on the GL, 1 million auto, 5 million excess, and 1 million comp. Typically, this is a 2-4 request. OBHS elected to reduce because they require 2-4 on 5 to 15 million contracts and 2-4 on the 15 plus. So the fact that they elected to go from 2-4 to 1-2 on the small contracts, that was a pretty big concession. It makes it a bit more affordable than if it was 2-4, but there's no wiggle room here. Like we talked about on OSIPs and CSIPs, you can push back on the excess requirement and say, hey, I can only carry 1 million, not 5. But here, with the policy, the carrier is able to offer cheap prices because they know the attorneys are doing the vetting of the subcontractors and will not allow the wrong one to get through. So because the state did not allow this project to be an OSIP, this is what they were left with purchasing, which, they've done the best they can to lighten the load for the small MWBE, but it is, you have to comply, no doubt about it.
Just also, I failed to answer Ryan's question completely in the beginning, and I know we're talking about OBHS later. So next week, LF Driscoll recently awarded CM for the Interfaith Medical Center Emergency Department is going to be joining us. And One Brooklyn Health is a $700 million program, but it's comprised of multiple projects within that 700 million. So there's large projects, there's small projects. This is just a small 15 or $20 million project, one of the early ones that are being delivered. But it's a great way to practice with a CM that you don't know. I know when I worked for large GCs, we'd go to, Columbia and NYU, and we'd say, okay, we want to build a tower. And they'd say, well, here's a $10 million computer center. I think we talked about this last week. They're not going to give you a $1 billion tower till they can see how you perform on a $15 million contract. So it's your way to introduce yourself.
Yeah. So at One Brooklyn Health, while we're on it, I'll wrap it up. Finish this part up with it. They elect in order to, hit their goals, and they are really taking them seriously. It's a big part of their proposal. And typically these projects are just awarded to one, maybe a joint venture of 2 GCs, and they'd be the likes of, Skanska, Lend-Lease, whoever. But in this case, they elected to really break it down, really do right-sized contracts. So there's probably going to be 30 GM and GC or CMs on this project. Of the 5 years of construction, they've broken it down to about 120 individual projects. LF Driscoll has one of these 100 plus contracts, projects. So they're the GC on that one. So
and they have pre-qualification lists for the GC, so they're pre-qualified. There are certain firms that are pre-qualified to do business there. So it's
Right.
not just haphazard.
yeah, and then they're also, so you have two, as an MBE, you have two ways to get hired. You can get hired through someone like Driscoll or another GM or CC, but they are even offering contracts directly with One Brooklyn Health that they're calling purchase orders for under 250K. So, perhaps there are, if you know that you are looking for that size of a contract under 250, it's a different process than if you're doing a larger contract than that. So message me separately, send me an email or Andis an email if you're looking for that under 250K, because I'd probably introduce you to someone different than in addition to Driscoll.
And that's a great way to get started. That's directly with the owner.
Yeah. STV is the program manager on this. They're the owner's rep, basically. So we can make introductions to them as well. I work very closely with that team. Okay, are there any other questions up there, or should I get back into it?
I think there was a question from Pauline about what would be the cost for an excess policy.
Tough to answer that question. I mean, there's a lot of things that go into it. Your loss history, what is your underlying GL program, what coverages are in it. It's tough. It's a tough market. 100K per million is not an unreasonable benchmark, I guess. You can get better prices than that. It could be a lot more than that. If you have 1 million on your primary GL instead of 2 million, your first excess is a significant difference in price. So, if you're in that ENS market, so again, remember yesterday or Tuesday, we talked about admitted versus not admitted. So admitted is Hartford, Travelers, Zurich, those types of companies that you go directly, your brokers go directly to. Merchants, Utica First, they're popular in the mid-sized direct markets. Then there's ENS. When you get ENS, it's very expensive. It's hard to get any sort of excess under 100K. And one of the project tracker tools that I'll show you later in this presentation has it's a real life example. His percentage of value for excess, it's like 7.3%. So of his receipts, his excess, which is a $5 million excess in this case, is 7.5%.
Thank you. Whoops.
Yeah.
Yep. Okay, we interrupted you enough.
Okay, I'm gonna keep going. Negotiating payment plans. This is valuable. Again, admitted, non-admitted. So the admitted market, they offer payment plans themselves. So there's no interest, there's no finance charges, there's no finance companies when it comes to admitted carriers. They offer you terms. It's a similar, they're more flexible. They can give you quarterly payments if you wanted, monthly. They make the rules. They don't, quite have the banking regulations that the finance company, or just requirements, rules that the finance companies have to follow. So again, just another advantage of being in the admitted market. Unfortunately for New York, they don't, perhaps on the industrial side, they play more, but There's very few admitted markets offering coverage in New York. You really have to be very large because they want a lot of premium in order to do it. And then non-admitted, they're finance. You have to use a financing company. U.S. Premium Finance, Stetson, Direct One. You might have seen some of these things. They're all the same. There's no advantage to one or the other. A lot of the times I see people who are paying 8, 9, 10, 11% interest on these finance agreements. And that's insane. That's your broker being lazy. And just every single time in my career where I've called the finance company and I said, lower this interest rate to 5%, 4.5%. They've even done it to 2.5% sometimes in particular situations, but never pay the first interest rate that's on your policy. And if you're paying 10%, 8% interest every single year instead of 4%, that 8% might not seem like a big deal if you look at it in 1 year, but if you're paying an extra 5% interest, just like saving for retirement, the longer you compound that interest, the better it is. If you keep paying 5% more, it's going to add up over the long run of your company. Do your best to tie the payment schedule to your construction schedule. So we talked about contract sign date, start date, pay date. You're probably going to have delays. Recently, probably about a year ago, I started talking to these finance companies, explaining the troubles that the MWBEs I work with come in, that we described. Sign the contract day one, you don't start working, you get delayed, you got these bills that won't stop. So we have successfully gone to these premium financing companies and said, how do we push this payment, the first installment, back 120 days? It requires a greater down payment, but they agreed to do it. So now the MBE, he went to his, this guy came to us with improper coverage. He won a bid. He didn't have the right coverage. We had to get him the right. We had to correct his coverage, and then they wanted to sign the contract. And he said, "Here are my payment options. You've got one option here where it's 20% down, 10 payments right away, or it's 35% down and it's delayed." He put it in front of the prime, and he says, "Which one do you want me to go with? Which one can you help me stick to? Because this policy was only covering this one job." And they ended up choosing the smaller one with the lower down payment. But the point is, you can negotiate these things. I don't even like the word negotiating, because you're creating the program with the underwriter. So it's in the underwriter's best interest for this policy to succeed. He doesn't want you to go out of business and not be able to pay his bill. They want you to make your payments. So if you go to them and say, I have an issue, get in front of it, be transparent, lay out the terms, you'd be surprised the lengths they would go to keep the policies active. It's not a good look for them when their customers cancel throughout the year for non-pay. Makes them look really bad. So they may not seem like they're on your team, but if your broker's good and has a relationship with the underwriters, I've even had clients speak directly to the underwriters when I felt that it would, make the underwriter more comfortable. So it's people try to, not a lot of FaceTime between brokers and the clients. There should be more, so these types of conversations can happen. So just know that there's more wiggle room than you think there is, and you've got more time than you think to pay. So the notice of cancellation, I find, is commonly misunderstood. If you have a payment due February 1st and you don't make that payment on February 1st, eventually, probably 10 days after February 1st, you're going to get a bill in the mail from a notice in the mail that says you have not paid. You've got 30 days to this date to make the payment. So now your payment was due February 1st. your notice of cancellation doesn't hit your mailbox until February 8th. Then you get a 30-day window from the 8th to make your payment to keep it open. And then you even kind of have another, 10 days after that 30 days. So and don't forget that, again, the underwriter doesn't want your policy to cancel. It's bad for them. It's bad for their year-end reviews. It's bad for everything. So they don't want you to cancel. They'll give you, as long as you're communicating, maybe send them a partial payment, talk to them, show them correspondence with your GCs, with your prime contractors, show that stuff to them, and they could work with you. So I always try to, make it clear that, I have some clients who just electively choose to pay 40 days after every due date. I don't advise that because, then one day you're going to actually need to be late or be reinstated or something. And because you have this history of always paying late, that stays in their system. So I don't recommend these strategies, but if you're struggling out the gate as a new business, it's important that you know the boundaries of when this money is really owed and you plan properly. And again, audits, might seem bad, but I view them as a tool if you plan properly. And the NOC also allows you to change programs midterm. So sometimes, you're with a bad broker. Let's say you renewed your policy with your broker in October and you're with them till next October. You can leave them at any time. If you sign a broker of record letter giving that policy to another broker, your incumbent broker who you've now just fired will still get paid their full commission for that whole year, and they're just no longer managing the account. So if you know you want to, that's why I like that approach more. If you're kind of with someone that you have a relationship with, but doesn't quite have the chops to serve you anymore, to give you what you need as a business owner, you can do an RFP process between renewals, and then basically he's on notice. He can come in, give their presentation. Perhaps that kicks that person in the butt a little bit, and they come up with a nice plan, and you want to keep working with them. But you can let them go, and they still get paid, because they also tell you can't leave a policy. A broker might tell you can't leave this policy without a penalty. If you let your policy cancel for non-pay and replace the coverage the day that the policy cancels, no lapse in your history, no penalties, no nothing. So I also see people have kind of felt bullied that they have to remain in their program, but there's always ways out of it, penalty free. And was there questions?
Oh, yes. Hi, sorry.
Oh, I hear someone's mic's on.
Sorry, I got on my phone because the microphone works here. I have a question about what you said about the not if you let your policy lapse for non-payment and then they cancel you, then there's no penalty because you want to leave your broker or leave your policy. But some policies have where the payment is 100%. What is it? I don't remember the wording, but basically it means that if you pay into the policy, even if you cancel, let's say halfway into the policy, you still liable for the full payment. Does that make sense?
There's what you're describing is called the minimum earned premium, typically, and you're right.
Correct.
Sometimes it's 100%. So the reason why it would be typically it's 25% minimum earned. So what that means is your down payment's 25%, and if you cancel the policy the next day, you're subject to 25% of the premium. There are instances where they charge more, 40%, 50%, 100%. Usually when it's 100%, that means that you've gone through the underwriting and the actuaries say, this is our minimum premium. We can't offer this job for less. We can't offer this policy for less than that. So if you're at the 100%, that's typically the case. You're just kind of at their minimum premium. And then at that point, you know, you're stuck with it for 12 months. And then the other reason why it would be higher than 25 is if they think you're risky and they don't think you can make it through. Then they might request more upfront. But typically it's 25% minimum earned.
And so that answers Pauline's question about, I thought I had to remain in my program. So it's not a black and white answer. It's
not a black and white answer, but it's very rare where there's a program that you just can't get out of. If there's a program that's, you know, significantly better, there's most likely a clean way. And perhaps if there is that much better program out there, it might be worth it to pay the penalty. You know, sometimes you gotta get out of a car lease that you no longer need, so you might have to pay a bit of a premium to get out of it. So it's a case by case basis, but more often
But
than not,
Anthony,
there's ways
before
out.
you sign on that policy, as you're reviewing an offer of a policy, if it does say more than 25% minimum earned, it's something you can question or
Oh
perhaps
yeah, like
negotiate.
there's sometimes we see 50. Can you lower it to 25? No, we'll meet you at 30. So yes, everything can be negotiated.
great answer.
It's you know, they can say no, but what I've learned since coming to TSIB is that you really can create anything in the marketplace. As the market gets hard, the tougher it gets. The underwriters are creative and they're trying to find, you know, ways to do this. And I also believe that they see the MWBE community as an opportunity. And if they can, you know, find the right, you know, sweet spot for underwriting criteria, you know, I can see new programs emerging that could be beneficial. They don't quite exist today, unfortunately.
Pauline also has another question. She never really looked into that. If I've been with my broker for years, but the company got bought out and bought over, and now I have a new person, in my opinion, is not as well versed as my old broker.
Yeah, so when companies get bought, you know, dependent on the size of your account and how big and who's buying the other agency, but generally, if your broker's not staying with the company, or, you know, they're most likely just putting you to an account manager who's just an administrative person. So when companies get bought, when smaller brokers get bought by big brokers, the big brokers just kind of looking at the staff. They're trying to pick up a few key people. They're trying to pick up a few key accounts. They could view your account as one that doesn't fit their model. Like they could have bought that agency who has a book of $1 million, but only really likes 400,000, 500,000 of that book. And they're just gonna see what happens with the remaining 500. So they could move you somewhere where now you're on autopilot for them and they don't know who you are anymore. So that happens frequently.
So Pauline pointed out that her broker is really good, but she's so good they moved her to something else.
Yeah, that's interesting. Did the broker leave the company?
She said no. She's still she's with the new company. They bought her too, but she's not the broker anymore. She's doing something else there.
Yeah, I mean that unfortunately that happens. Insurance companies are getting bought left and right, and there's no predicting what'll happen. Whoever's buying them out, they have a plan, and you know, they just kind of bully everyone that they buy.
Okay, we better move on because we're gonna run out of time.
Okay. Multi-rating hybrid programs. This is important. A lot of the times, you know, single rated policies can be good, can be bad. If you're a trade contractor, you're just doing one trade, you've got a single rated policy. I see a lot of the times people are doing a lot of different things, but they're only, there's only one class code on the policy. And I'm like, you're doing $2 million in roofing work, but you only have carpentry on your policy. Yeah, isn't it great? They don't even know I'm saving all this money. That's a dangerous, dangerous game to play. You're going to have a claim, and then they have the authority to say, you've never represented roofing to us. We're not covering this claim. If there's something called dual rating on an if any basis. If you're mostly doing carpentry and you might dabble into some roofing, but you're not sure yet, or you're just bidding on a new trade, tell the carrier you're starting to get into this work, put me rated on an if any basis. So you're not putting exposure to it and premium dollars to it today, but you're letting them know. And again, now you're going to have a rate and you're going to know the cost, because not only can they just deny that claim if you don't have it rated on there properly, they could also hit you with an audit, like a surprise audit that says, we just discovered you do roofing. And then they go back and they say, you've been doing roofing for 3 years. We're going to charge you back premium for all that work. So that can even happen. So look at your policy, really evaluate your operations, make sure you've got the right classification codes in there to avoid, major catastrophic problems. Look 12 to 24 months out. Identify similarities between the work that you're doing. Are you doing a handful of OSIP projects? Are you doing GC work here and direct trade work here? Look at the 24-month pipeline, see what can be pooled together, see what risks should be separated. I got a really good thing here and a really good rate on my plumbing, but I can do this GC thing. You don't have to put it onto your current program. Keep it separate, separate the risk. Don't, muddy the water on something that's working well with something that you're not so great at. So think about these things, when you're with your broker and you're looking at your 24-month pipeline. Hey, what work do you feel comfortable about executing? What's a little more risky for you? Maybe we'll put a higher deductible here on, your wrap-up work. Maybe we do 2 carpentry rates on my program, 1 rate for non-wrap-up work and 1 rate for wrap-up work. So now they're only charging you when you're doing a wrap truly for that offsite coverage. Because if I'm a carpenter and I'm paying $30 a foot, for insurance on a wrap-up, when the onsite coverage is through the wrap, I should only be paying $5 a foot for the offsite coverage. You have to tell the underwriters that. And I'm sure everyone on this call has participated or looking at a lot of wrap-up projects. So that's a change you can make midterm. You can call that carrier today and say, I'm doing all this wrap-up work. I need you to put a wrap-up rate on my policy. They might say, no, I can't do it till renewal. Like if you have a lot of wrap-up work on your books or something, but it'll be a case-by-case basis. Every carrier views it differently. Some might just not charge you at all for it. Some might put a low rate on it. But these are the types of hybrid programs that you can create with specialty carriers. They don't just get this traditional stuff. Here are my numbers, like spinning a slot machine, what's coming out. You just never know. And the captive stuff, it's a bit bigger. We're gonna let me see what's next here. Oh, we have time. Captive, if you're paying, in the $500,000 range for across all lines of coverage, you have to strongly be looking at this today. It's a learning curve. It's an application process. It's almost like joining a country club. It can be that intense of a interview process, but it is the way to go. If you plan on being a large trade contractor for years, get into this program now. Tax deductions, dividends, ownership, the benefits are endless. So if you are in this size range, we should have a conversation to give you some more basics and education on captive, and it should be in your considerations for long-term plans. Any questions, or I'm gonna keep going?
Keep going, Anthony, but maybe we do that captive discussion in a roundtable with some of our bigger.
Yeah, that's a good idea.
contractors.
I would love to talk about that.
There was one question that just came in. Why do you still need a rate for wrap-up? If you keep the certificate of insurance covering a particular job, are you saying that your broker will bill you as they were at risk? As if they were at risk?
When you're a sub participating on a wrap, you are required to bring off-site coverage to the table. So if an accident happens not on the site that the wrap is, covering, there's coverage there. Some carriers, so you have to have an insurance program. So when a certificate of insurance to submit in order to win that job on that wrap. So as the sub, you need to tell, your underwriter, tell them exactly how much wrap-up work you're doing, and they, more often than not, they're just going to cover it. So they'll allow you to submit the cert, and if there's a claim, there's a claim. They'll just kind of build a little bit more of that. Like if you're going to do one wrap-up job, they're not going to care about it. They'll just let your policy fly over it. But if you're doing 10 wrap-up jobs and it's a significant number of construction volume, they might put a rate, a much lower rate on the offsite coverage for the wrap. So each carrier views it differently. You can just move yourself to a carrier that doesn't charge you for it, but it might be in your best interest to work with a carrier that does. So you got to evaluate, on a case-by-case basis. It's a loaded question to answer. I hope I did. I don't know. Any other questions up there?
That's it.
So the other thing, this is kind of the last thing I wanted to touch on, just quickly, life cycle of a claim. Just to make sure everyone knows how significant that they can be. Don't be overlooked. Don't be the person who's only going to start thinking about claims after the first one comes in. Because if you have one labor law claim and it hits your loss runs, it's there for 10 years at least, and it affects your premium right away. And literally 300-400%, it can affect your GL premium and excess premium. So it might seem like I got a $5,000 deductible. If I have a claim, I'll pay for it and I'll deal with the increase later. This isn't like you got a seatbelt ticket with Geico. Any sort of claim in New York, any labor law claim is going to immediately, and greatly impact your cost. So accidents are going to happen on one day. That injured employee has up to 3 years to file that claim. So when these accidents happen, it's really important that your team supports that employee that was injured and doesn't, makes them feel heard, protected, watched over. If they don't, these attorneys are vultures, and they'll get a hold of that person and they'll coach them up on how to get all the money out of this claim, and they'll delay filing the claim for 3 years so you don't keep documents. It could be a mess. And then the claims remain open for a really long time. And then eventually they close, but there's reserves set. So these labor law claims, once they come in and it says fall from height, bang, you got a $500,000 reserve right off the bat, because that's how quickly these legal costs add up. So, I understand money's tight. It doesn't quite require investment of money to pay attention to safety and prevent accidents. As cliche as it is, changing that culture is a real thing. Talking to your staff every day, just so they're thinking about safety, doesn't cost you any money, but it can really it's something. It's better than not doing it.
That's like all those guys that run around with the orange shirts that say 1-800, call this lawyer, I'll get you money.
Yeah, those are a real thing. Those are definitely a real thing. Project tracker tools. I got to show you this real quick. So these are tools that clients use to track their insurance costs. So this is that case study that I was describing to you previously. So this is a spreadsheet that we give to him. So first he starts with this form, new project tracker enrollment form. Every time this contractor has a project, he fills out name, address, owner, GC, size, prime, projected payroll by trade, sub cost by trade, contract sign date, expected build over the next 12 months. The contract might be 10 million, but what is being billed in the next 12 months? That is what needs to be reported to the insurance carrier and tracked very closely. Then the construction start date, end date, scope of work, OSIP, CSIP. This gets gathered, it gets sent into the broker, and it ends up into this spreadsheet, which has his GL rate, which is $125 per thousand. That's a high GL rate. Excess, $73. Workers' comp, 13. So now he has sent us now 10 forms, and he enters the hard cost, and it just spits out his general liability premium, excess premium, workers' comp premium for the combined. So if we change this number to $1 million, the whole spreadsheet changes. Now there's certainty when he bids. So now when he's home, late, kids are sleeping, he's getting back to his bid paperwork, and he can doesn't have to worry about the math. This is an automatic spreadsheet that does everything for him. Eventually, we're going to expand it to include these project start dates, etc. And then he can keep track of his audit, so he knows what's coming. And the other key is what I want to show you here is of all these projects, 2 of them are non-wrap. The rest are wrap. So this first column, this first row here, if you calculate his total premium cost to the total hard costs, his percentage of value is 24% of his premium. His premium cost is 24% of his construction value. When you adjust the numbers and pull the non-wrap jobs out of that equation, his percentage of value is now 12.5 on the GL, 7.3 on the excess, and 13.3 on the comp. So the more non-wrap work he takes on throughout the year, the better his insurance rate, his percentage of value rate gets. So even though this $125 GL rate might seem crazy high, when it's all broken out, this program is operating much more effectively than that rate would indicate. So this is how you have to evaluate your program, not just by what the rate is on there. You know, he could have seen this rate from me and then seen a different rate from somebody else, but not, and then some broker could say, you're paying 125, that's crazy. But when you actually look into it, he's not paying that much. And this high rate can even help him get more of a credit on his bid from the GC because his rate's so high. So when you're looking at all of these aspects of your company, your insurance program just gets built around it. And when you show something like this every year to the underwriter of how much you're paying attention, you're doing their job for them. They're not going to give you that massive increase that everyone else is receiving in the hard market. They're going to, perhaps give you a better option. So that I see some more questions coming up here, but that's it. That's everything I had for you guys tonight.
Great. So the first question is the rate is percentage of payroll or percentage of gross?
So for the I can stop sharing my screen. For the general liability, it will be either GL or payroll. 9 out of 10 times it'll be sales or payroll. On the GL, 9 out of 10 times it's sales. When you're smaller, it might be payroll. Workers' comp is always payroll. Well, I think I can pull these questions up.
I really have to thank you, Anthony. And again, I have to say that typically if the MBDA is going to support a webinar from outside of our own members running it or ourselves, we generally tend to go to, of course, Andis is our strategic partner with contractor compliance. But in this case, I mean, how often do you get to hear this information from the other side of the table? And typically as consumers of insurance products, we never get to hear this part. So I thought it was so important to have, and I thank Anthony and TSIB, who we've known for years, I've known for years. But this is invaluable information. We appreciate our MWBE community and the time that you take, especially after work, after Zooming all day. But this information is really valuable. It really affects the bottom line. So thank you so much, Anthony, TSIB, Andis, Woodleaf of Contractor Compliance, a dear friend to the MBDA Center, all of our BOC network folks that are on the call. I see Daryl, Lauren, Carter Lard, who's working with us now on our health sector work. We really appreciate you all, our MBDA members, Prapon, I see Pauline from JPR Builders, Pablo. So please, thank you for taking the time, and we appreciate you at the MBDA. And I'm sure if Ryan is still on, he might have had to step away on behalf of the BOC network team. I really appreciate all of the people who attended today. And next is the coup de grace, which is really meeting LF Driscoll. And if you came tonight and just to hear that, they were awarded the contract for a small contract, relatively speaking, at One Brooklyn Health. And we learned tonight that there are opportunities there and direct opportunities under $250,000. So this is invaluable information. Thank you so much for sharing that. And I'm sure if you have questions about that, what should we do?
And the LF Driscoll team is dedicated. The RFP from One Brooklyn Health asked that CMs team up with MBEs as co-CMs, and they selected an MBDA member to be their strategic partner on that project. So they are serious, and I won't let them get away with nothing.
I second that. They're serious about it. And Roxanne, thank you. Thank you for all the attendees. I'm thrilled that you want to listen to this stuff. So I'm always here to talk about it. You can reach out anytime. Andis and I will send out a follow-up email, with links to the content, to the presentation, to schedule a call with us, whatever you may need. So
thank you so much. And it's like a dentist. I don't necessarily want to go, but you gotta go.
yeah.
Thank you.
One last disclaimer. I just want to say, I don't have to tell LF Driscoll what not to do. They're very sincere.
And we're looking forward to having those opportunities. So for those of you on the call tonight or hanging in there for 2 nights in a row, really appreciate it. Missed dinner, maybe. Please make sure you write to us, any of us, and me, R. Nielsen at bocnet.org for those opportunities at LF Driscoll. But we'll see you Tuesday night, I hope. Thank you.
Thank you.
Good night. Good night,
you.
everyone.
Oh, one last question.
Yes.
Don't go.
Well,
Pauline wants to know, how did she learn about the 250K?
Yeah.
Anthony, so that's
I'm gonna ask, who does she go to for that? I think I know the answer, but I'll find out tomorrow.
Anthony's information is at the end of the presentation, and we'll send a follow-up as well.
Yeah.
Roxanne,
Thanks to Carter.
I was going to
Yes.
tell you that Ronaldo is also doing some work at One Brooklyn Health.
Okay. And as our one of our MBDA members is actually leading some of that effort. So we'll make sure But please send, if you have any questions, just send it to our team and we'll make sure that you guys are really putting it in the time. Thank you. Good night.
Bye, everyone.
Good night. Good night,
Good night. Good night, Daryl.
Good night.
Roxanne. This was very interesting. I really enjoyed it.
Thank you, Daryl.
Yes, yeah,
Very useful information
Useful.
because, you know, I've been promoting this because I work for a lot of countries. And I'm going to try to get more of them on to tune in on the 10th. Okay.
yeah, that's the night. But this was information that, it's like in-service training. Thanks so much, Ryan, for putting
Yeah.
all the invitations and all this back office stuff together. Really appreciate it. Great job.
Thank you.
Have a good night,
Roxanne.
everyone.
Good
You-
night.
You're
Good night.
such a great presenter, Roxanne. Everybody was super great. So, yeah.
These guys
Yeah,
got the content.
definitely.
That's the key.
And Daryl, I got your advocacy email for the EDC. I'm sure it was great to support the participation by agencies in New York City that have committed to finance and fund MBDA and programs like BOC, and we appreciate your efforts.
Thank you. Thank you. Thank you.
All right.
Thank
Night.
you.
Thank you. Good night,
Bye.
guys.
Good night. Stay safe.